Hello, everyone, and welcome to KJH Insights, our monthly podcast. I am Sarah Bull, partner and portfolio manager at KJH Investors. Thank you for joining us today on our podcast, where we provide you with an in-depth look at the biggest issues affecting the market and their impact on how we are building and protecting our clients' wealth. I have Joel Clark, CEO of KJ Harrison, joining me today. It's great to be together again, Joel. Welcome.
Yeah, thanks, Sarah.
So, Joel, a lot has happened since our last podcast. We highlighted the tariff war and talked about a prolonged tariff war, and that was a scenario that could hurt markets. And since then, a lot has happened, and we're receiving all sorts of questions on Trump 2.0 tariffs and the tariff war. So, what I thought we would do is dedicate this podcast to that and really talk about some of the concerns that are going on. So, Joel, if you're okay with that kind of format for today, because I think it's absolutely timely, I thought maybe we could start with the biggest question of all, which is, why is Trump doing this?
Yeah, that's a good question. And obviously it's topical. And just to go big picture, I mean, every year you get a 5% correction in the market, every other year 10%. So we just had a 10% correction. There's always a reason. And so, what's front and center is the unpredictability of Trump. No one seems to be able to get into his head. I think he's providing chaos theory for a reason. And so we're just hot off our monthly webcast with clients, and Peter and Andrew did a great job. Instead of trying to pinpoint the answer, really just outlining multiple scenarios or reasons to answer that question. So what I'd love to do is maybe just go through each one of those as an answer to that question.
I think that's a great idea. So some of the things they really outlined, I would say almost 5 theories. So let's start with the first theory, which is the idea of short-term pain for long-term gain. And really, like a lot of CEOs do that are coming on board, trying to use the idea of cleaning up from the past administration. And you keep hearing Trump refer to, I'm cleaning up from Biden, I'm cleaning up from what he did. Can you elaborate on that?
Yeah, so that's the first one is, he's inheriting an economy in his mind that isn't in good shape, high levels of inflation, high levels of indebtedness, deficits. That's why he's launched the Doge department to start to chip away at that deficit. But in terms of the economy, he has a period of time to really blame Biden. So what he's trying to do is make a lot of quick and drastic changes in his first 100 days so he can lay them on the heels of Biden. And then following that, the economy's his and he's sort of bottomed it. So the analogy you gave of incoming CEOs taking massive write-downs is the right one.
There's a lot of talk about Trump wanting lower rates and the 10-year Treasury yield down. Why is that so important? Or what's the theory behind that?
Yeah, so maybe 2 reasons. One is obviously getting rates down is much better for the economy, gets multiples up, it gets cost of capital down. Consumers who have high levels of credit card debt, it costs less. So always having interest rates lower rather than higher is a good thing. And then another potential theory expressed by the Treasury Secretary is they have $8 trillion of debt that has to roll this year. And if they can engineer a bit of a slowdown and get rates down, they can lock in lower rates for longer. So that would be a second reason for sort of Trump's chaotic behavior.
Right. And that lower rates for longer, does that just overall help the economy in the long term?
Yeah, and eliminates a bit of interest rate risk with spiking bond yields, which is never good for anyone. Someone does have to buy those treasuries. So no one wants to buy treasuries knowing that rates are going a lot higher. We can potentially lose money. So they need to calm the bond market down.
Yeah, exactly. Okay. And then, it's interesting, right? Because there was a lot of thinking or talking during his election period that he was going to focus on tax cuts and not tariffs. And by doing that, he was going to help the average American. So Is the third theory that he's doing all of this because he believes he's helping that base and helping benefit the working man in America?
Yeah, I think, obviously won the popular vote. It was a pretty demanding sweep. And again, it suggested that Wall Street's done well over the last while with the stock market, and now time to benefit Main Street. Main Street suffering with high levels of inflation. They talk about eggs and prices of food. So he's really trying to return that favor support to his constituent base who is suffering. Do I believe that? Not sure. I think Trump is pretty motivated by the scorecard of the market and economy, but for the time being, he's out in the media suggesting that he's doing this for the people.
Yeah. And do you believe that generally what we learn in Economics 101 are tariffs are a lose-lose? Help us understand the logic behind he's doing this for the people.
Yeah, it's hard to know. We haven't had tariffs for a very long time, so I actually don't think anyone really knows, and it's hard to know. Everyone proposes the theory that tariffs are bad for sure, and so that's why you're getting the volatility. And it's less about Main Street, actually. The impact of tariffs is on the decision process of corporations. CEOs are trying to make decisions about laying out capital for investment in the future. You only do that if you know the rules of engagement and you don't have shifting sands. And so his approach of always having the ground move makes it very unstable and uncertain for business leaders to make any commitments. So I think that sort of backfires. And then, of course, it ripples down to the consumer. Is there going to be higher inflation, higher cost? So everyone retrenches. So it's certainly in the short term, you can't really see any positive benefit.
And are you starting to see that in the numbers? Are we starting to see big corporations almost frozen in their thinking?
Yeah, in more of the commentary, certainly. I mean, we haven't, we'll be approaching Q1 reporting season shortly. We might see it in the numbers, but certainly the commentary out of CEOs is suggesting that, they're seeing lower reduction in consumer corporate confidence, increased macro uncertainty, softness in domestic demand. So yeah, it's starting to have a ripple effect.
Yeah. And what about just the theory on he's just using tariffs as a pure negotiating tactic? So, very different, again, from how tariffs have typically been seen as something to be used strategically.
Yeah, I think that's the one that everyone believes to be the case, although it's diminishing. I think a month ago, as he was laying out tariffs, the market wasn't really adjusting. Monday morning, tariffs on Canada, Monday at 3 p.m., there isn't. Okay, the market wasn't moving, but he seems to be pushing a bit harder. So it would make sense. It's the negotiating tactic. That's classic Trump style. And so that's an obvious one for sure, that it's just his ability to negotiate and understand people's pain points and get more economic benefit for the U.S. in trade negotiations.
And what specific concerns is he trying to address if, in fact, it's a negotiating tactic?
His belief is that he is carrying the burden for the rest of the world in all facets. Other countries putting tariffs on them, funding NATO, funding military. He's trying to switch the balance of power back to the U.S., where they gain something and continues to build the U.S. economy for Americans. And so he wants to attract capital into the U.S. He wants to attract jobs. He wants companies, for instance, in Canada that might be hurting because of tariffs, moving their head office to the U.S. So he's really doubling down on trying to protect the U.S. dominance globally. I think he's got one last shot here, is what he believes.
Yeah, so he really believes in the long-term benefits, boosting domestic manufacturing, and is willing to accept the short-term economic disruptions.
And that's sort of the fifth one, right? Which is completely shifting the U.S. economic model to one of tariffs and lower income tax. That's a bit of a doozy because the unintended consequences, no one knows. He doesn't know them. And so that would be a very challenging period of time that we would have to go through. I just don't see that case because, again, if the economy starts to hurt, people lose jobs, it really goes against what he's trying to do, which is trying to build jobs and boost the economy. So I think that's an outlier one, although it's definitely talked about.
Yeah, I mean, I think it's definitely talked about and debated because he constantly quotes McKinley and that was one of the smartest presidents. And the reason why is because of his tariff policy.
Yeah, exactly.
So, was the approach that he's using tariffs to tackle border and drug crises was that a ruse, or is that also part of all of this?
I think it's part ruse, but part serious. I mean, listen, I'm all for curbing importing fentanyl into any country. It's killing millions of people, and I'm sort of glad that he surfaced that as an issue because no one else seems to be worrying about it. But putting that aside, that is not the crux of initiating a massive trade war with your friendly ally. So,
Yeah. And I guess, those are five good theories, and I think really help all of us understand why Trump is doing this. So thank you. But I guess the sixth theory could be, is he simply crazy?
I mean, I think he is. I wouldn't suggest that he doesn't know what he's doing. I think he has intent. He just might not be able to a probability weight the outcomes the way he thinks are going to occur. So, or anticipate the response from other countries. So, I don't think he's stupid or uneducated. I think he has a strong belief. I just don't know if he can really handicap the severity of the outcomes. I'm not sure about that.
Yeah, it seems that he's not as pro business as most people thought initially.
Yeah, certainly not in the short term. I think we'll get to that in the back half of the year. I think all the good stuff will start to flow. I think he's hitting everyone back to, reason number one, Biden's economy. I think he's trying to do all the tough stuff initially, so he's becomes popular as he goes into the midterms.
Yeah. And I guess it's a question of really trying to figure out what is just posturing and what, again, like we just went through, what he actually believes.
Yeah, time will tell.
Yeah, time will tell. I think that's right. I think it's the duration of all of this that we need to watch, right?
Exactly.
So let's talk about the Canadian market here. The Canadian market seems to be holding up. Help us break that down.
Yeah, the global markets are strong. Canadian market certainly hasn't dropped to the same degree, which is it the Canadian market stronger? Not necessarily. I think you've had such a good run with the US market and the concentrated tech stocks. They've really taken it on the chin. So, the TSX is down 5%. You have the S&P down 10, NASDAQ 13, Russell 17. So it's certainly hanging in there better, but it didn't go up to the extent that the US did over the last 3 to 5 years either. So commodities are benefiting. We have a fairly high level of concentration from the material sector, and the prices of commodities are going up. So a net beneficiary of this inflationary tariff type economy is stuff that comes out of the ground is more expensive. And as we all know, there's very tight supply demand fundamentals in many commodity markets globally.
Is the market reaction then more fear than fundamental uncertainty?
Hard to know. The sentiment indicators are at extremes. It's been very swift. The baby's been thrown out with the bathwater. There's been carnage. It's been positioning. A lot of factor funds, liquidation, volatility has spiked to 30. It's hard to tell if it's just a 10% correction and it's been a swift one and a volatile one, and if we bottom here for a bit. So, what you watch for in corrections is it just that, or does it turn into something more significant? So I don't think there'll be much downside in the short term. What you're looking for is the quality of the rally. And does it roll over, retest, hold in, or does it cut through? Unfortunately, you just have to be prepared for scenarios. What's interesting is the credit market or credit spreads haven't been spiking. So that's a bit of an indication that the credit market, which is generally considered the smarter of the two, isn't as worried of a deeper economic downturn.
Yeah, the brunt of this has all really been in equity markets, not in credit spreads.
Exactly.
So I'd just like to pick up on the last point you made, because I think that's really important. And I think we've covered a lot today for our listeners. And that's on the importance of diversification. So how I think we could wrap this up here is just a little bit on the playbook. I think one of the key things is asset mix and the importance of diversification. What else are you thinking of, or what else is the investment team thinking of next as we watch all of this unfold?
Yeah, so here's what we're not doing. We're not trading headlines. We're not shifting the portfolio in different directions based on a headline that might come out. That is a surefire way of destroying value. I think this is to be taken seriously. It's not just noise. It's not just rhetoric. It's real. And it's impossible to predict the outcomes of a trade war. I don't think anyone knows. We haven't had one for a long period of time. Unintended consequences or things, second derivative consequences that people did not anticipate. So we're not trying to make bets. We're not trying to make calls. We're relying on our tried and true principles, one of diversification across asset classes, credit, equities, diversification across industries and companies, and always focusing on the best companies in the world. The best companies with the biggest moats tend to do their best and most progress in downturns because the weaker ones fall away. So volatility is uncomfortable, but it is a necessary precursor to making high rates of return in the future. So what everyone's forgetting about is there's opportunities now. Stocks have fallen 20, 25% in 12 days. So we're focused on the future and sort of a bit giddy that we've been given an opportunity to buy shares again in great companies.
Yeah, I think that's a great place to leave it then. I think, like you just said, a lot of the bad news is already priced in now, and we're sticking with our investment process of protecting capital, but driving long-term returns. And through that investment process, and in terms of buying best-in-breed companies, this chaos is creating some buying opportunities. So I think that's a good way to think about the current market and how we're navigating it. Any last-minute nuggets?
No, I think you just did a great job summarizing it. I think that's a good spot to leave this conversation and listen, we'll have more to talk about in the next few months. I think things will calm down in the back half. So we'll see.
Yep. Okay, great. Well, thank you very much, Joel. And thank you to our listeners for joining in today. We'll be back next month, as Joel just said, with another issue of our KJH Insights podcast. Wishing everyone a happy spring. And as a reminder, if you have any questions about your portfolio, please reach out to anyone on the investment team or private client team. We'll continue to provide you with commentaries and updates as the market and the market narrative unfolds. And all of those are available on our website at kjharrison.com. Look forward to speaking with you again next month. Thanks a lot.
This podcast is produced solely for informational purposes and is not to be construed as an offer to sell or the solicitation of an offer to buy a security. The information herein is based on sources we believe to be reliable but is not guaranteed by us and does not purport to be a complete statement or summary of the available data. Any opinions expressed herein are statements of our judgment on the recording date and are subject to change without notice. Any unauthorized use or disclosure is prohibited. Receipt and/or review of this presentation constitutes your agreement not to reproduce, display, modify, distribute, transmit, or disclose to others the content, opinions, conclusions, or information contained in this podcast.